As we continue to go back and forth around the 2900 level, it makes sense that the earnings season is probably the main focus. So far, we haven't seen a lot of stock movement based on the earnings results. As such, we are likely dealing with the idea of pressing the all-time highs and whether or not earnings are going to justify these levels. Overall, though, this is a market that has been very bullish for some time, so there's no point in fighting the trend. The market clearly has a lot of buy on the dip mentality, so I believe we continue marching higher and knock on the door of the new market high. There may be some resistance at 2940, but if we break through, the door is open to 3000. So let's take a look. We're looking at here the 2-year weekly chart on the spiders, the SPY, and the close was 290.02. We're staying with the 2-year weekly because that's where the action is. This current level here has moved above that previous level here in early 2018, and we're approaching this level here, which is the previous high there in late 2018. So the head and shoulders pattern may still hold, but I think it really is weakening. But now we're moving into that double top territory, and we're marching up, but very slowly. Looking at the MACD here, previous high, interim high there, and then the current level here. I think we're going to probably move above that interim high because the separation between the fast line and the slow line is still pretty decent, and both are moving well above the zero line and into these upper levels. So I think there's good trajectory looking at the MACD. Into the histogram, it does show that things are perhaps leveling out. Maybe not quite ready for a decline, but perhaps we're on the edge of a possible decline. And if we do, that still means we probably have a few more weeks in positive territory given the amount of separation between the fast line and the slow line. So no real concerns yet. Price rate of change, parabolic move from here all the way up to this level there. Not a real straight line for you, but you get the idea. The sawtooth came on down, expected after that parabolic move, but we're well above the slow line here and in those upper levels. So I think we're going to continue on. This here into the relative strength, this is the main concern. Let's see, I would say the main concern, we do have another concern we'll get to in a second, but there was that previous high in 2018, early 2018, then the interim high there in late 2018. And here we are at this point, and you can see that the move has gone sideways. Now, the overall level from that previous point there in early 2018 is still downward. So that's the main concern. Moving in here to the stochastics, we're still moving parallel with the fast line above the slow line, but I would imagine that we're going to approach the slow line. The fast line will approach the slow line here within the next week or two. So we'll have to see if there's enough power to reflect off or if it goes under. But again, even if it goes under, such as it did here, it can move back on up and attempt another move back through the slow line, and that's going to take a couple of weeks if it does that. But we'll be watching that, so that's not a real big problem. Moving here into the volume again, the major problem was the RSI, the relative strength, and the minor problem in my mind is the volume. The volume has a general downtrend. And that's not great when you want the stock market moving up on good volume. So we'll keep our eye on that as well. Then the Williams looks fine. We got another sawtooth coming here, so hopefully it comes down and then maybe reflects back up. We will see. Moving back up here to the price chart, it looks again, head and shoulders is probably broken. Double top coming up, and we'll have to watch that real closely to see how strongly it breaks above the previous high, if it does. So right now, in my humble opinion, the risks on the downside still outweigh the risks on the upside. So be cautious, be careful. You have time to make any moves because we are near a top, so you want to make sure that you're positioned in your portfolio well, whether we continue up or continue down. I would say continue to stack some cash, one way or the other. For ChewDog Charts, thank you.